we're going to have a quick look at fading the edge. Essentially, fading the edge of market structure just requires you to see the markets a little bit differently, in a different way. What we're going to do is just show you the example of fading the edge. A very common structural term used by professional traders. All right, let's go back. I've got some things marked out for you. As you can see, these are the key levels here. You can see that the market moved from this key level to this key level, retested these key levels, okay? Then subsequently we formed a range, okay? So let's just mark a range firstly to identify how to fade the edge, right? So you've got a range here, all right, which is based upon this high and this low, but you can do another bit of structure. If I just circle this firstly, before you do fade the edge, you've got to understand structure. In this area here, you can see this is the edge of a range, okay? So you can just come along here, say that this is the low of your range, this is your high of the range from this point to that point. I'm going to circle that point for you. All the points I'm using, I'm going to circle. There's a point. When we form our range opinion, and these range opinions here are formed by an opinion that we formed a long time ago, which is right over here, okay, which is even over here and over here. You can see structure here. Okay, so now that we've got a range, what we want to do is to fade the edge. First, we need to work out what our bias is, okay? Now, bias is important, right? So we're either going to be bearish on this pair or bullish on that pair for different reasons, okay? So for instance, if I was bearish on this pair, I would look to fade the edge of this range by, what that means is when price comes up to this area, I will sell it. So for instance, price comes up to this area, I sell. Price comes up to this area, I sell. So that's the move down, and that's the fade back to the edge. So we're fading the edge, which means that I sell here, okay? But if my bias is bullish on this pair, then I'm going to fade the edge from the lower edge of the range, which means let me mark it for you first, guys. I'm going to make it green because this is where we're bullish, okay? When we're fading the edge of the range. Those are green. So here we're bearish when we fade the edge of the range. So we're waiting for a move up, which we call the move up is called the fade back. So look, we've got a gap down and a fade back. We're bearish for selling, okay? Here we have a gap down to the low of the range and a fade back for selling, okay? That means we're bearish on that pair because we're only looking for sells in this explanation, okay? Not in this. I wouldn't sell this for anything, but this is definitely it's in a range because there was a bear trend. We've hit these key levels and then we're turning bullish, so we're going to be looking for buys. So how do we get buys? We wait for the market to move up and fade back to the range and we buy, okay? Right, so when you could have got a buy here, you got a fade back here, a very small one. So this is we call a fade, and this is where we buy, okay, if we're bullish, right? So that's how you gap and fade the move. So bears, when you gap and fade the move, you're waiting for a pullback, for a retest of resistance, and bulls wait for a fade back, for a buy, for a retest of support. Okay, so to fade the edge of the range, to fade the edges just means you're going to fade the edges of the range. So for in this example, I would have been a buyer, and then the next thing I would have done, if I'm bullish on this pair, which I am, I would have said, I've also got 2 points to form a channel. No, there's my 2 points. I'm already seeing a trend developing, right? Okay, so I'd be buying here on this arrow as I fade the edge of the range. Actually, on this level, I'd be buying, which is across here, and I would call that the support. I'm going to make it white. Edge of the range. Okay, I'm fading the edge of this range. Okay, so I'm bullish, so I'm waiting for a gap up and a fade back to buy. A gap up, which is a small gap up there, and a fade back to buy. And even if the market gaps down again from here in the future, I'd love to buy there. And as I'm bullish, I would even fade the edge of the range when we break the range for a gap up and a fade back to touch the top of the range and for a buy again. So, and there you see it, gap up, fade back. It's the edge of the range now right here. So we're fading the edge now. We're fading the edge of the range, and we're fading the outer edge of the range, because this is that range and this is the retouch of the range. Okay, so we're bullish here because we want to be bullish, because our bias is bullish. And there you have another fade back to the edge of the range from a breakout of the range, and there's another one there, look. So if I'm bullish, I let the market gap up, retest the high of the range, fade back and buy the low of the range if I'm bullish on this pair. And then when I get my entries, I'll be looking for where I can get a channel line. So I can see 2 points already. Having say I've got in here, now we're starting to trend a little bit. I've got 2 points to mark a trend already with this point and this point, no? Then we'll just see how it plays out.